Hi, everyone, and welcome to UBS Trending. I'm Anthony Pastore. Thanks so much for joining us. According to a recent report by PitchBook, U.S. venture-backed companies raised roughly $330 billion in 2021, and that's nearly doubling the previous record set in 2020, with approximately $750 billion, yes, that's trillion with a T, in exit value created through either going public or through an acquisition. So this is a really interesting topic, and we're going to talk about that today with my guest, James Jack, the head of the UBS Business Owners Client segment, who's sitting here to my left, and two guests who know a lot about business exits. We've got Mark Ackler, a serial entrepreneur and currently a managing director at Math Venture Partners, and Mert Isuri, who's an entrepreneur in residence at Math Venture Partners and the former founder, CEO of SwipeSense. And together they have actually co-authored a new book entitled Exit Right: How to Sell Your Startup, Maximize Your Return, and Build Your Legacy. So thank you, gentlemen, for being here with us. And Mark and Mert, it's nice to have you here joining us virtually into the studios. It's a really interesting topic. And Mark, I wanted to ask you, why did you decide to write Exit Right? And here's the real big question is, who is the target audience? Are you talking to people who are currently business owners, people who want to be business owners, people who are trying to think about how they exit that business? Who are the folks that you're trying to engage with?
So, Anthony, it's a pleasure to be here. Thank you so much. And the answer to your last question is yes, all of the above. So let me tell you the story of why we wrote the book, and I'll tell you who it's for. So 10 years ago, I met Mert when he was a young entrepreneur, and I became his advisor, mentor. We became good friends. And while we never invested, Math Venture Partners never invested in SwipeSense, I became his unofficial board member, sort of his mentor and guide. And 2 years ago, in 2020, we were going through a transaction. And as all transactions, there's highs and lows. It's an emotional roller coaster. And Mert was coming to me for advice and guidance, and I was helping him through the process. And when it was all over, we were having coffee right before COVID hit, and Mert was kind of grumbling a little bit. It was a great transaction. He should have felt wonderful, but there were some challenges. And I said to Mert, in the spirit of giving back, why don't you write this down? Why don't you write it down while it's still fresh in your mind, so that the next time the company that acquired you goes through a transaction, it was a big consumer goods company who had never really bought a tech company before, you can say to them, hey, this is what I went through. Here's how we can make it better. And in that process, out poured 10 pages. And I looked at Mert. I said, there's so many books, business books out there. There's books about how to start businesses, how to raise money, sales, marketing, HR, the messy middle. But there's very little out there about how to sell your business. And we realized, as entrepreneurs who really care, in the spirit of giving back, that we wanted to collect all the wisdom we could to help entrepreneurs through this perilous journey of trying to sell their company. So we interviewed dozens of CEOs who've gone through transactions, and we asked them, tell us the stories. What do you know today that you wish you knew then? And we got great stories, and we talked to heads of corp dev at all the big tech companies, and we talked to M&A attorneys and bankers. And that's part of the empathy that drove the book, which is your second question, is who was it written for? And while certainly the main character in the book is the business owner, we realize that there are many stakeholders involved in a transaction. And so we wanted to look at it from the points of view and perspectives of not just the business owner, but their key executives and employees, their investors, the acquiring company, the bankers, the attorneys who are part of a transaction. And really, there's just a lot of wisdom about general business in great detail. So that's who we wrote the book.
Yeah, and what I love about that, Mark, is you made a really compelling point that there are a lot of business books that are out there, but very few that deal with this particular topic. So there's a great value here. And James, you and I have talked about this so often. As you're the head of the business owner client segment here at UBS, we've talked about how exiting a business, as we say, is a pretty taboo topic for many business owners, and they don't even really discuss it until they're getting ready to either do it or it's already done. So that's one thing. But I really wanted to talk to you about the sponsorship. So UBS is sponsoring Exit Right, the book that Mark and Mert have written. Why did we as a firm want to be part of this particular project?
Well, I think, Anthony, is business owners are our clients. That's where wealth is really driven by entrepreneurship. And we've been talking to our business owner clients for our entire 150 plus year history, but over the last 4 years or so, we've been building this business owners client segment. And I think one of the important things that the message that we've been getting out, we've been working with our financial advisors to talk to entrepreneurs, is whether you're a 30-year-old startup founder or a 75-year-old CEO of a multi-generational family business, an exit may be the most significant financial event of their lives. And you should really be thoughtful about it, intentional about it, and have a plan. That aligns nicely with what UBS is all about, planning and thinking ahead. A lot of times business owners haven't thought of their exit until the time comes for the exit, until someone knocked on the door and made an unbelievable deal. And what happens then afterwards, if they're not prepared, is a gruesome process sometimes where you're going through the ups and downs and the roller coaster that Mark just talked about. So we could potentially make that a better experience if we're more thoughtful about it. So last year I was talking with Mark and Mert, and we were kind of sharing some war stories and talking a little bit about our goals on each side. And we said, there really is a great alignment, and I'm so grateful that we got connected. And then after that, it was, we've got this book. Why don't you look at it? And so that's when I started reading it, and I said, what, there's some great thoughts here, particularly for venture-backed companies and what their insights are. But I think the story appeals to really any type of business owner.
Right, and it seemed to align really well with what you and your team at UBS are already talking about with our advisors and our clients about the strategy of exiting a business and how to prepare for that. So this is great. Mert, let me bring in here, and thanks for being so patient. In the book, you detail the elements that are required to, as you say, maximize the value of a particular transaction, and you refer to this as the FAIR framework. So that's an acronym, capital FAIR. Why don't you tell us about it and tell the audience how it's relevant throughout the process of planning to exit a business?
Absolutely. It's a pleasure to be here. Thank you for having me. With every exit, the fundamental question that a founder thinks about is this the right partner for me? Am I selling the company to the right buyer? And at first, a surface level answer to this question is whoever pays the highest price. And that's sort of a lazy answer. A great transaction looks less like a one-off short-term transaction and much more like a long-term partnership where both parties are aligned for creating long-term value. So we wanted to sort of codify what we've heard from all parties around the table, entrepreneurs who've exited multiple companies, buyers who buy companies all the time. And we identified some common themes. And we call this framework the FAIR framework. It's what everybody wants after all. Everybody wants a fair deal. FAIR stands for fit, alignment, integration, and rationale. And if you look at the great transactions in both venture world or in other industries, great exits have elements of 4 of these things. And to go into them briefly, fit simply means cultural fit. Do we get along as two companies? Sort of the anti-example for this is, Columbia and Sony Pictures. It's completely different cultures, and ultimately the acquisition didn't end up working out. Alignment is the internal and the external alignment of both parties in terms of where the companies are going. Are we aligned towards the mutual value that we're going to create together? Integration simply refers for how these two companies are going to come together and start creating value. We've heard so many war stories of founders exiting their companies, and 2 years, 3 years later, the products are still standalone products. They still haven't integrated. So it's so critical and understudied to figure out how these two companies will practically come together. And then and only then, the rationale. How is this 1 + 1 = 100? Why is this company more valuable under the umbrella of the acquiring company. And the rationale is so important. In one hand, it needs to be simple. You should be able to explain it to your grandma. And on the other hand, it should be long-term, meaning that the value that we're going to create shouldn't be just measured by what we're going to do next month, but over the course of the next quarters and years and years and years. And this, by the way, ironically, is the best way to get the highest price for your company. Ultimately, the acquiring company's reasons for buying your company is more important than your fundamental metrics. I mean, the example that comes to mind around this is when Facebook bought Instagram for $1 billion, there was a sort of this audible gasp heard around the venture world. For $1 billion, is a company that barely has any revenue. 8 years later, Instagram is responsible for 20% of Facebook's revenues. I think they stole it for $1 billion. The rationale was really, really strong in that case. So these are the 4 elements of what makes a great exit, not just for sort of the well-being and the financial outcome for the founders, but really finding the long-term home for your business in terms of maximizing the value that you guys are going to create together.
Yeah, I love that because it's like you're basically telling anybody watching today, don't overcomplicate things. Right? I mean, there's a really simple framework. Not that actually doing this kind of planning is simple, but if you stick to the principles of the framework, it can actually help in your process. So this brings me to the last question, which I'm going to ask of all 3 of you. And Mark, let me start with you. Clearly, we talked about how planning in advance can certainly have a significant impact on a successful business exit. So what would you say is the one action that maybe that a business owner should be watching, who's watching today, should know about to get started with this particular process?
Well, let me just give 2 camps. The first is great advisors. So that means tax, legal, financial. It's really important to have the A team around you because those relationships, those advisors are going to make all the difference in the world for you. The second issue is a long-term horizon and perspective. I have a saying, it's not about you. So there are a lot of stakeholders in the transaction. There's your customers, there's your employees, there's the acquirer. And the question really is, many entrepreneurs are so laser focused on what is it going to mean to me? What is the financial impact? Don't lose sight of all the other relationships, all the other stakeholders, because we're big believers in playing the long game, and the legacy of your actions are really important.
Mark, thank you so much. Mert, let me ask you the same question. What would you advise to business owners or even future business owners when they think about what they should be doing right now?
Transparent and consistent communication with your internal stakeholders as it pertains to your exit. We want to really remove the stigma of talking about the sale of a company or the long-term exit. Look, ultimately, it's about impact. And I think this is best framed in that manner where if you're talking about an exit, it's less about I'm going to make this much money or we're going to sell at this price and this is the return for the shareholders. That's a byproduct. The real value of an exit is here is how we're going to serve our customers more. Here is how we're going to create higher level impact with our company. Now, obviously, with your board, this is a different conversation. You should talk about timelines, expectations, thresholds, levels of energy from both sides of the table. Again, right now, this is a taboo subject. And if you bring up the exit, people just automatically assume that you're tired and you no longer want to be there. I believe if this is a consistent topic of conversation, bring it up once a year, have an exit talk with your board, it reduces the stigma and the anxiety around this very natural conversation. And let's be real, why are we here? We started this company for this eventual outcome. We should have an open conversation about it. And internally with your team as well. Now, obviously, the focus is to build a great business. But if we frame the exit as how do we create a higher level impact, higher level value for our customers and our ultimate folks that we serve, then suddenly it becomes a strategic conversation to have internally as well. So we just advise our founders and the operators that read this book to really make this less emotional and much more thoughtful and intentional with stakeholders around the table to make sure that we're aligned long term.
Yeah, that's such a good point, Mert. I think that in the hope of, obviously, is that having conversations like these will help take that stigma out of having these taboo, quote unquote, conversations, right? So that this is really important. And James, let me just ask you, so you talk with our advisors at UBS and our business owner clients on the regular. What are you saying here in complement to what Mark and Mert are talking about?
I would just build on what they both said. I think At UBS, what we say our purpose is to reimagine the power of investing and connecting people for a better world. Leverage the fact that you have a fantastic financial advisor at UBS, or you could get one if you don't have one, and leverage who they know, their network, their knowledge, the experiences of what UBS brings to the table, and the relationships we have. So, we have a relationship now with Mark and Mert because of what amazing thought leadership they've brought to the table. That's what the power of UBS is in your financial advisors. So have those conversations with your advisors. Make sure you're building out a network with them. And then I think also similarly to what Mert said about making it less taboo, maybe on an annual basis, hold your financial advisor and your other advisors accountable to a discussion about what does it mean for an exit, what does it mean for you, your family, and the people and causes you care about and the legacy you want to leave.
That's great. Gentlemen, thank you so much. By the way, congratulations again on the book. It's coming out hopefully around February 15th, so just a couple of weeks from now. Great to have you joining us, and thank you for the partnership. I hope we can do a lot more with both of you over time. And James, thanks for putting this all together today. Good to see all of you. Thanks, guys. Congratulations.
Thank you.
And for more information for our viewers out there, there's a lot of information on the UBS website. That address is ubs.com/business services, all one word, just like you see on the screen. So lots of great resources and info there for you. And make sure to follow UBS in general on social media, LinkedIn, Facebook, Instagram, Twitter. You can also check out all of our UBS Trending episodes there on demand, as well as on the UBS YouTube channel. And as always, if you have any questions about anything we spoke about today, we always recommend you speak with a financial advisor. Until next time, I'm Anthony Pastore. We hope you have a fantastic day. And remember to keep your eyes on what's trending. See you soon.